Today's market is not pretty, but one token is losing more than the rest. A token we've been covering regularly on this channel, and that's Pi Network. Now the question is, why is the price going down that much? Why do we see this underperformance? Let's have a look at on-chain data. Let's have a look at relative valuations. Let's try to figure out whether or not this is a good buying opportunity. Now here's the chart today. We are currently at 87 cents. And over this month, we have seen a lot of volatility. It almost looks like a pump and dump. What's causing a price to rally that much that quickly and then to deflate again in a short period? I don't think that the reason is a lack of interest, because actually the videos that I made on the Pi network, they're one of the best performing videos on the entire channel. So here are the best performing videos in the last 28 days. And the Pi video that was just published a few days ago is at number 1 with 18,000 views. Zooming out a little bit, the statistics in the last 90 days, out of the top 10 videos, 4 of them were Pi network related. So I've got my strong doubts that it's a small retail investor that's suddenly dumping the price. It's suddenly giving up hope. This looks more like a planned move by the market makers and potentially by the centralized exchanges themselves. Because have a look at where Pi is traded. It's all on the centralized exchanges, and the trading volume is led by OKX, closely followed by Gate.io and BitGet. The trading volume is also noteworthy, between $200 and $300 million in the last 24 hours. And then on top of that, we've also got the bets on the price, and that's even more liquid. Almost $1 billion with a B of trading volume on the futures market, again on Gate.io, OKX, and this time Maxi is also part of the party. But here's the thing, there is no ported version of the Pi Network token. Pi Network is its own blockchain. And this does have a significant impact on how the price discovery happens, right? If all of the supply is mainly held by the whales, it's mainly held by the market makers, maybe the Pi team gave some tokens to the market makers in order to list Pi. If that's the case, then it's not the small retail investor that has a few $100s worth of Pi that's moving the price. It's the big guys. The big guys might manipulate the price in the direction where the fewest people anticipate the price to go. Because have a look at this here. This is the Pi US dollar chart. But it doesn't go to today. It actually stops a bit earlier, already on the 4th of January. Now when we see a chart like this and we get offered bets on the price, where are you going to place your bet? If you're completely neutral, you try to be opportunistic, you don't really think about the project at all. If you just look at this chart, it would be obvious to rather bet on falling prices, right? And so here's then what the market makers do. A huge short squeeze. This was a rally of 70% in the matter of a few hours. This is how people get liquidated. This is how people lose all their money. But what happened afterwards? Let's continue a bit. The price tended to go down, and then a bit more sidewards trading movement. Things started to bleed again, and so it seems fair again to bet on falling prices. But then, boom, another short squeeze. And just notice how this price is appreciating, right? When we take the last reference where the price went up, we might think, okay, maybe we see another 50-60% increase, and maybe at that time it might make sense to bet on falling prices. But this time, again, if people bet on falling prices, they got burned and burned again and burned yet again, because the market makers have the deepest pockets. They can move the price in any direction they like. And so this time the short squeeze was 177%. First people got wrecked here, the second batch of short sellers got wrecked here, and again a few more of those squeezes. And so when the price goes down today by 31%, it's just a reflection of the market makers starting to delever again. Where they started their short squeezing, they might bring it back down to those levels again. But again, it always depends on how many people are actually interested in betting on falling prices. If a trade becomes too popular, then it's very dangerous to follow the masses. We always want to be contrarian. Now for completeness sake, here is Pi relative to Bitcoin, and here's Pi relative to Ethereum. So it seems to find higher highs versus ETH, but there's no guarantee whatsoever that we are going to bottom out after a drop of another 13%. Right? This token does get quite a bit of manipulation because there is very little liquidity on chain, and it's just the whales and the market makers that push the liquid Pi at least around. In theory, the market cap is more than $6 billion, and it shouldn't be that easy to manipulate the price. But the issue is that most of that supply is just in the hands of the market makers. It's not in the hands of retail. Retail tried to mine the Pi tokens, but very often the KYC didn't go through. Very often even the affiliate commissions didn't get paid out. And so this is the perfect asset to wreck the masses, to move the price in the direction where nobody anticipates, because the masses are clearly interested in the token. We can see this by the clicks on the Pi video. Now, after so many years in crypto, I think there's only two strategies to make money in this market. It's either trying to find altcoins very early, potentially using wallet tracking, buying things before the masses do. And while this is a strategy that can work, it's also comparatively risky. Things like Virtual Protocol or SPX 6900 went up massively this year. But if instead you bought Optimism or IMX or Polygon, you wouldn't have had such a nice time. Now, with small bets, a few $100s here and there, the strategy does make sense. But for the vast majority of the portfolio, we have to take less risk. Now, the common narrative is that this less risky bet is simply Bitcoin. And while it's true that there's less risk in Bitcoin than in many altcoins, the price can still go down by 77%. So what can we do? I think the answer lies in taking advantage of crypto's market structure. Most altcoins underperform Bitcoin most of the time. So for example, have a look at this again, right? This is the performance of the top 100 cryptocurrencies in the last year. Again, SPX 6900 outperformed everything else. And here at the bottom, we see Bitcoin. So in the last year, Bitcoin appreciated by almost 72%. Now, how many altcoins outperformed Bitcoin? It's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Out of 100 altcoins, 17 outperformed Bitcoin and all of the others underperformed. And so with a larger part of the portfolio, we can take advantage of this market structure. So instead of buying Bitcoin, we can buy this here. Now, this is the exact same time frame that we see in those charts. What we see here is again a Bitcoin chart, but it's slightly different. It's not Bitcoin relative to the US dollar, it's Bitcoin relative to Balancer. So what we are seeing here is Bitcoin's relative performance to one of the altcoins, an altcoin that tended to underperform over the long term. Now, why do we see that constant outperformance of Bitcoin over the alts? So it's not just that most altcoins underperform, it's also that the underperformance tends to be rather constant. The reason for this is tokenomics. It's an expanding token supply. Because that's how the venture capitalists and the members of the teams of all those projects make their money. They've got a vesting schedule. They get a token allocation, but they can't sell directly. They have to sell over time, and that depresses the price relative to Bitcoin. Yes, on bullish days, everything is going up. But when we zoom out a little bit, most altcoins are not doing as well as Bitcoin. Now, this is not common knowledge, but we can actually set up a position in a portfolio in a way that we make money when the relative performance of an asset versus another one is going up. So we don't have to bet on the crypto macro. We don't have to bet on Bitcoin going up or down. We can just make money when something outperforms or underperforms. Now, I've made several tutorials on that topic, how to profit from falling prices or gaining from relative valuations, or over here, how to win in bear markets by shorting altcoins. Now, it's not important what the macro is doing if we focus on the relative valuation. Again, the nice thing about the strategy is that it works in any market condition. At the bottom is again Bitcoin. Bitcoin has its massive crashes, and the largest retracement that we saw in this chart was maybe 50%, while the gain was much, much larger. So this is an 8,000% gain in relative valuation, while Bitcoin itself only made 100%. And so I'm of course sharing my own trades as well. Check this out. This is where I opened a short position, a relative short position on the Trump token. That was on April 30th. What we see here is Trump relative to Solana. Some community members entered the short as well. And then I closed the position a few days later for a gain of 142%. Now, I actually shorted Trump twice, so this was an earlier trade. And again, here are a few other trades that our community members are making. So if we set this up right, if we've got risk management and hedging properly in place, there is real risk-adjusted alpha in positions like this. And so of course I shorted the Trump token again because of the tokenomics. Over time, the Trump supply increases. And it's really important to understand this concept. I believe that risk adjusted, if you want to make large bets, not just a small bet on the altcoins that might do 100x, if you want to bet a lot of money of our portfolio, then we have to bet on something that risk adjusted performs relatively consistently. So this is Trump in US dollars. And if you just bet on Trump going down, then when the market itself is appreciating, you've got a problem, right? Over this time frame, Trump did not go down. However, Solana relative to Trump went up. So that's the exact same time frame. That's a gain of 35%. So it's all about looking at what tends to do worse relative to something else over time. And how to set up those positions is explained in the videos over here. And so feel free to check it out. It's currently $125 per month. It used to be 165 at the peak of the bull run. Now attention is still relatively low, and so you can lock in the lower rate. I will not increase the rate for anybody that's already subscribed. Only the people that sign up when everything is hyped, they will get the higher price. But if you sign up now, you lock in that price. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. Feel free to also check out Premium. Again, the link should be somewhere over here. You can just click on the link here. It should bring you to the website. And so yeah, see you next time on YouTube or see you in Premium. Cheers.